Ladies and gentlemen, thank you for tuning in to what is a very special edition of The Block Live. I want to take a second to thank our sponsor, eToro US. They're making the show possible. They're making all of this possible, allowing me to talk ad nauseum about crypto, macro, and whatever strikes my fancy for a given day. You got to try it out. Trade $100, you get $25. eToro US. Thanks for the help on that end. Check them out. We have a really special guest for this episode of the show, Raoul. He is joining us after what seems like an eternity in COVID-19 markets. He joined us on The Scoop, our podcast, back in April, and we're really excited to unpack what he's noticing in the markets and explore some of the things he's been looking at. He's been hard at work over at Real Vision. Raoul, hope you're doing well. Thanks for joining us again, this time in the flesh. Well, the virtual flesh. How have you been?
Good. I mean, every day I'm on the small island of Little Cayman. I live between Grand Cayman and Little Cayman. I came over here on March the 8th. I've been off island to the main island for 8 days out of that entire time. So every day is Groundhog Day. I mean, it's identical here because nothing happens. Only 140 people live here, but it's nice. It's not a bad place to be.
Well, I'm between Little Williamsburg and Little Clinton Hill in Brooklyn. So it's a little less, it kind of feels like Groundhog's Day sometime. You know, every morning I go to the Dunkin', get my coffee, and then stare at Twitter for 10 hours and go to bed. Anyway, a lot has happened since April, right? Like just in terms of the macro picture. Last time you were on, we talked about, the Fed papering up the cracks. Not a lot has changed on that front. The sort of balance sheet continues to grow. The stability and the robustness of Bitcoin continues to grow, and the attractiveness of it as a hedge continues to grow, with Paul Tudor Jones saying that it's the fastest horse and he's never been more excited about it. And we reported earlier that Millennium was on the verge of diving into the market. So let's start at a high level. Equities are, outside of yesterday, have for the most part been doing all right. What's your sort of, 411 on the market right now?
Look, I've been using this thesis that I probably spoke about in April, which is the unfolding. I call about the unfolding. And that's essentially how most recessions play out in markets. You tend to have the liquidation event, which means everything's changed, I'm at a risk. That was into March. Then you have what's known as the hope phase, when everything rallies and everything says, it's not going to be bad. And then it starts turning into the despair phase, normally is what you'd call it, when people are like, oh God, okay, it's worse than I expect. Most recessions go on for about 18 months. So to think this thing was all over in 3 months was somewhat naive. What was interesting as you talk about the market, the NASDAQ went to highs, we saw record speculation. Meanwhile, things like banks didn't move. Bond market didn't move. Things underneath that were related to credit didn't look good. The European banks is another one. The big indebted companies like General Electric, AT&T, Ford, GM, they all didn't go up. So they basically bounced a little bit and then traded sideways, following what the economy's doing. Because the economy went down, went up a bit, and then flatlined. And so we're still kind of somewhere around negative 4 or 5% GDP growth. So my hypothesis is the longer this goes on, and we're seeing the rise of the virus again and restrictive measures, whether it's by governments, states, or individuals, my mum's not going out, she's not spending money, that once you put that, the baby boomers, and put 76 million of those in America alone, plus the Europeans, that's 200 million people that are taking evasive action. So it means the economy's slow. If that's slow, then cash flows are slow. If cash flows are slow, then debt becomes a problem after a while. And now we're in that weird space where we've got no stimulus almost anywhere. So economic risks are higher than the market is expecting. They're kind of looking through the election saying, there's going to be more stimulus because Biden's going to win, or even if Trump wins, there's going to be stimulus. There's a lot of time between here and then. And, the stimulus that we're supposed to be getting was supposed to be the stimulus from back in September. We never got it. So that's papering over back cracks, not going forwards. And there's not going to be enough revenues in the economy to service some of this debt. So that's what I'm focused on.
But not everything is as bad as maybe we thought back in March in terms of unemployment, right? I remember seeing notes back in March and April about 30% plus unemployment by year end. Things are looking a lot more rosier in terms of the job numbers and the employment market, the labor market. Are there some signs of things not being as bad as maybe we thought?
Yes, look, there was some. One was the inventory rebuild that happened because everybody stopped manufacturing. And then there's been this big inventory rebuild because people bought a load of stuff. So consumption's been good, housing market's been good, but they've been driven by actual pandemic behavior. So it's not a structural improvement or return to normal of the economy. That's not happened yet. So, we've got to be careful about extrapolating stuff. Anybody who's extrapolating no fall in unemployment from April was clearly on the wrong track because we knew a bunch of people were going to come back into the labor force. The question is how many and how big is the structural unemployment rates? So again, it's a balance. And my view is it remains negative GDP growth year on year of about 4 or 5%, which is, don't forget, for everybody else, it's the largest recession any of us have ever lived through. I mean, that's bigger than 2008. Yet we forget it because we had such a massive fall. So it kind of feels better. And parts of the economy are doing great. As we've seen this shift to video, the digital economy has done extremely well. Old economy names with high debts have done less well. So it's a bifurcation. People call it the K-shaped recovery. And I think there's some truth to that. There's a real bifurcation to what's going on. It's killing off old business models, driving new ones. And that process of rejuvenation of the economy is a good thing. But, it's a hard way of doing it when you see, 170,000 restaurants in New York went out of business. That's pretty tough. That mainstay of Main Street of mom and pop, small businesses, that kind of stuff, local restaurant, local stores, all closing. That's not great. But over time, it'll get replaced too. I don't believe in the narrative of New York City's dead. I think actually it's a fantastic opportunity because you're going to lower rents in commercial real estate and allow people to open new shops, which may be a little bit fresher and different and younger and more creative. And, things that people couldn't do before that they were doing in Brooklyn, they can now do in Manhattan. So I think it's going to add a new vibrancy, but these things take time to play out. And out of crisis always comes opportunity. It's never been a better time to start a business. You start a business when everybody else is closing theirs. That's the way to do it.
Yeah, definitely would be excited about some cheaper rents here in New York, or I might have to come down to the Caymans.
It's more expensive. we don't pay tax, but we pay very expensive rent.
Yeah, I'm sure. What about the food's got to be expensive too because
everything's imported and we pay import duty. So there is a tax, it's import duty.
Yeah.
So, but other than that, there's no property duties, no inheritance, no anything.
Like what, $30 or something?
What's that?
A hamburger?
Yeah, I mean, I tell you, you go to the grocery store, just buy a basic weekly shop. You're not buying venison and caviar, and it's like $800. You're like, really? I bought 3 lettuces, a tomato, and a bottle of water. It's crazy.
So you mentioned before, like the election. This is obviously something on the mind of investors and traders across Wall Street. Do you not buy into this idea that a blue sweep could not only boost the U.S. recovery, but lift GDP across, U.S., Eurozone, Asia, et cetera, because of the additional stimulus that we could see?
So over the long run, I think that's probably right. But I'm always interested when the market has reached peak narrative. So peak narrative, if you look at the speculative positioning short the dollar, it's the largest ever. Speculative positioning short bonds, the largest ever. Speculative positioning long commodities, the largest ever. So everyone's priced this in. Now the question is let's assume that there is no contested election, that we get the results immediately. Biden's voted in, he wins Florida and Texas, and everyone's like, great. Okay. So when does the stimulus come? Well, not till they come into the office. So that's February. No stimulus. Because the Republicans won't push it through. So that's a problem. Also, we're in the middle of a large spike in the pandemic. Now, I understand hospitalization rates aren't as high as they were last time around, but they're rising. So what is Biden likely to do, considering he ran the election on it? Well, he's going to make sure that he imposes some restrictions, rightly or wrongly. Again, it's not a political statement, it's a fact. So if he does that, the likelihood of slowing down the economy, whilst there's no stimulus, is going up again.
Mm-hmm.
So you get a feeling that you actually could see the market going into this completely the wrong way around. Mm-hmm. After that, the stimulus is, don't forget, back fixing and not forward. We haven't got to the forward stimulus yet. That's what I think is coming. But I don't think they can probably get it through until the economy is much worse again. So if we see the economy roll over, then you can push through a huge stimulus package, 5 trillion plus, 5-7 trillion, the new Green Deal. So that's one outcome. The other outcome is we go to the election and the Democrats don't win the Senate. Well, then nothing changes and no stimulus is coming and it's a real mess. So in which case, all those positions get washed out. Or the other hand is Trump wins. Well, these are all positions for the Democrat wave. So therefore, they get unwound. So I think the probability is that the market has got ahead of its ski tips.
Mm-hmm. You mentioned the dollar, right, which has just taken a beating this year. And last time you were on the show, we actually talked about this, and you kind of unpacked how the dollar is going to break the global system. How has your thesis around that maybe changed or amplified?
Again, yeah, it's narratives, right? So if I look at the US dollar broad trade weighted index, it's up 1.24%. The narrative is the dollar's incredibly weak. The reality is it's actually gone sideways. It rallied massively, came down again, and it's pretty not moved since. It's not moved for months. I'm looking at the Euro chart. Basically not moved since June.
It's kind of flat since the summer.
Yeah. And so, okay, the market wants a decision. Currencies are going to move one way or the other, and it will set the trend for a lot of other asset prices. It really depends on my solvency thesis, because if the insolvencies rise, then the dollar's going higher, because most debts are denominated in dollars. And don't forget, there's 13 trillion foreigners who borrow dollars. And that's not central banks, that's basically, that's not governments, that's basically corporates abroad. So I think if I'm right, the dollar goes higher. If I'm wrong and we go to reflation trade, the dollar breaks lower from here. That's great to me because it resolves it one way or the other, because we're all bored of arguing over this. And what's interesting for me, and particularly in the context of Bitcoin, is that, okay, the easy argument that everybody wants the dollar lower because why makes their Bitcoin go up in value, right? So that's like the dollar's going to collapse story. I get it, great. Happens, I'm long Bitcoin, great, it goes up. But what happens if the dollar goes up because of the insolvencies? Well, that's the interesting one, because everyone says, well, deflation, that's bad for gold and Bitcoin. No, it's not. The reason being is we know that the only outcome, if we see deflation or growth slowing, is more stimulus. So both outcomes, rising dollar is very deflationary. Both outcomes lead to Bitcoin going up. Mm-hmm. The worst case scenario is a flatlining. Kind of little bit of stimulus, not much stimulus, growth back to zero, something like that. That's pretty terrible for Bitcoin and gold for the narrative. But anything else, it does well.
Mm-hmm. And we've been kind of in that flattening territory for the past, 3 months or so.
Yes, but something changed, and that was Europe. Mm-hmm. Right? We've seen this. Europe starts, and the US follows. And Europe saw a massive explosion in the virus. And they've only just started restrictions. So the likelihood of a massive rise in the virus over the next 2 months in Europe is extraordinarily high. How big this is going to be, we don't know yet. But all I do know is economic growth in Europe is already falling. They cut short the summer because it started spreading when everybody was in Spain. They cut short the summer, everybody spread it home, it's exploded everywhere, and growth is doing like this. So all the real-time economic data is rolling over. So cut to the US, what's happening? Even New York's starting to spike. So we're seeing spikes everywhere. And that, again, will lead to a slowing of growth. So, so we talk about it flatlining. I actually think it's been transitioning. And most of these, if I look at the price of oil, look at the price of the US banks, they basically follow the real-time economic data, and it's all tipping over.
Mm-hmm. The one thing that really hasn't been introduced yet at all is inflation. When we talked about this topic last time, you mentioned that you were more worried about deflation than inflation. Expectation of inflation 5 years from now, the break-evens are showing that we're still well below 2%. But people still keep talking about this narrative when we see allocate to Bitcoin on their balance sheet. It's all about inflation, but we're not really seeing it necessarily.
Well, see, again, it depends how you define inflation. One is the Fed were buying tips. So that's the inflation index bond. So therefore, they are driving the inflation narrative on purpose. They own 20% of the damn thing now, the ETF. So there is a false signaling going on. It's clearly a deflationary world. Oil's rolling over again. We're not seeing huge demand growth globally. So it is still a deflationary world. The inflation that people think about is the devaluation of fiat currency en masse. That's different. And that is the thing that's driving gold and Bitcoin. It's not necessarily showing up in prices. Yes, agricultural commodities, there was a bad harvest, there's some supply issues. Those things tend to be shorter lived. We saw a big inventory rebuild in China, so a bunch of copper and iron ore got bought. But is there real demand-led inflation? No. Is there a dollar collapse inflation? No.
No.
But where is this inflation coming from? It's not. But the inflation that we're picking up in gold and Bitcoin is the actual purchasing power of all the currencies, because Bitcoin's outperforming every currency, as is gold.
So point blank, which one is better as a sort of macro hedge against all the things you're talking about? Is it Bitcoin or is it gold? Is it the $250 billion market cap asset or the $8 trillion established, well-known asset? And which narrative is being picked up amongst the folks you're talking to on Wall Street?
My view on this is comparing two elements, gold as a store of value and Bitcoin, right? Gold is less volatile and it has the track record. Great. Bitcoin is more volatile, but that volatility is skewed towards the upside, but there is some big downside volatility. Mm-hmm. But I think as a store of value, it has the more attributes as pristine collateral that I've talked about quite a lot, because of its completely restricted supply, its demand criteria, the divisibility, the transferability, and all the moneyness elements of the store of value. So if you were to compare the two, it all comes down to, well, one's got better function, the other's got better form over time, and one's less volatile. So it's horses for courses. But Bitcoin has something else. It's also a call option on the future. Mm-hmm. So that's what's super interesting about it, is you get the world's best reserve asset or piece of collateral, and against it, embedded, is a call option in the future of the financial system. And that's incredibly valuable. Mm-hmm. And so for me, I don't see any situation that Bitcoin is not a superior asset over the next, call it 2 years. I just don't see in any scenario. Every scenario that makes gold go up, Bitcoin does better. Mm-hmm. And that's an extraordinary thing. And I compare Bitcoin price on a relative basis to equities, to commodities, to currencies, to anything. And it's breaking out against everything, including gold.
Well, we definitely should talk about correlations, but there's something that you wrote that I thought, or that you talked about, that was really interesting and relevant given everything we're seeing with PayPal getting into the market, et cetera. PayPal looking to buy a crypto custodian potentially. The fact that you view Bitcoin as this, life raft away from the CBDC. CBDC is another thing that's sort of becoming hyped up in the market with, whether it's the European Central Bank looking to digitize the euro, China's, moving full steam ahead on its initiative. And I think the point that you're making, and I think it's a really salient point. If you have all of these companies and countries looking to build out the infrastructure to support CBDCs, to support digital blockchain-based currencies, then you have the infrastructure to support Bitcoin and to support other cryptocurrencies. And so if you're Morgan Stanley or if you're Goldman Sachs and you see the Eurozone, you see China building out their CBDCs, and you need to interact and engage with that new, currency or this sort of revamped currency, then Bitcoin and all these other cryptocurrencies, at least from my perspective, and I think this is your perspective, become almost like a Me Too sort of addition that is almost growing.
Also, listen to the regulators and the authorities everywhere. They talk about Bitcoin and they acknowledge it and they say, let's just get the regulation right around it. It's not going away. I mean, there was a podcast this last week on Bloomberg with Benoit Cœuré, who was the main driver of central bank digital currencies at the ECB and now at the BIS. He's like, we acknowledge Bitcoin. It's not going away. We understand that this has shown us a future. So we need to create on-ramps and off-ramps in a digital world. And we also want DeFi to be built on top because, we can't compete with the private sector. So basically what they're saying is we see the world has changed and we'll integrate with it. What they're not saying, which is the false narrative, we're competing against it. They're not even trying. They're saying, fine, it exists.
Yeah.
So let's just create, and it makes sense. We're living in a digital world. Let's all move to that world. So for me, that's incredibly bullish because, as you point out, it means that it's going to be more accessible, more understandable for everybody. And yes, it won't be the dream that some people have of being, the anonymous kind of libertarian thing, because it's going to connect with the system. Now, you can stay out of the system. The Life Raft does work because it is valued like gold is valued or some other commodities are valued. They have a store of value. I mean, you can opt out and put your money into wine or art. People do. So that's normal. But because it's digital, it'll seamlessly integrate as a way in and a way out, a way for you to vote against your government and their abuses of their own currency system or the inflation rate or whatever's going on. It's there. It's there for you as your personal reserve asset.
And the regulators seem to be on board with this narrative. I was actually talking with someone about this today. It was either 2 or 3 weeks ago, the chairman of the Commodities Future Trading Commission, speaking publicly about how much he thinks Ethereum is revolutionary. I mean, this is something that, wind back the clock 3 years ago, we were having conversations about whether or not ETH was a security. And now we have the CFTC head saying that this is a technology that he views akin to being as transformative as the internet. So
look, I'm seeing that. I'm seeing that everywhere. We're getting the ideological adoption at governing body level. That's happening in front of our eyes, almost on a daily basis. There's a new announcement. So that battle is won. The argument that they're going to ban it is a very long way away. And certainly they're not going to ban a $240 billion asset or a $300 billion asset class. It's just not going to happen. Mm-hmm. Because as you say, people are starting to come around to the fact that actually this is transformative and gets around a whole bunch of problems the existing financial systems got. Whether it's central bank digital currencies or using blockchain and smart contracts on ETH, or whether it's Bitcoin itself as a reserve asset, there's a lot of problems being solved here.
Mm-hmm. And that's the other sort of, narrative we've seen building, especially here at the block. Companies, allocating a portion of their balance sheet to Bitcoin as this sort of, strategy of preserving their wealth. The question 2-3 years ago was, when are hedge funds and asset managers going to get on board? We never really thought about corporates maybe leveraging Bitcoin as a way to sort of preserve their capital.
You see, having interviewed Michael Saylor for 2 hours on Real Vision, a phenomenal, amazing guy. And, I really do like him. I think the language he speaks is the language spoken by somebody who basically is in control of their own company that he built from the ground up. most companies aren't able to think in 100-year terms and, protecting against a 2% inflation rate or whatever you want to claim the inflation rate is. So I don't think it's the language of Microsoft and Apple and the big corporate cash flows. But I know that the people who are doing work on proving out diversification of assets and how, as a component of the corporate treasury, it acts as a hedge against the credit portfolios and other things. Once people start talking that language a little bit better, which we're not very good in the crypto space at speaking other people's languages, we want everybody to speak our language, and our language is a bit impenetrable. But once you start speaking that language, they will come, because it actually has a very good diversification effect within a treasury portfolio, much like it does in a pension portfolio. But again, we're kind of screaming at them about, all of the things, the crazy stuff that we all talk about in Bitcoin, when we're not talking about Barra asset allocation models and the things that the pension industry talks about. We're not even talking to people like Mercer and the consultants who affect trillions of dollars of capital. No, we're just shouting on Twitter all day. We have to change if we want to do it, but it will come. It will come slowly because there's always a visionary who adopts it first. But we need to institutionalize it.
I mean, it took decades for alternatives to creep their way into pension funds and the like. Saylor's definitely really interesting. I'd be curious to get your take on the 90% allocation that they've taken. He has this thesis around, am I going to be on the gold standard, the dollar standard, or the Bitcoin standard? And he's gone all in because of the inflation narrative that exists. Is that maybe too far, or just?
Look, I'm a markets guy. I just look at risk reward.
Yeah.
I've got, 75%, 80% of all of my available cash in Bitcoin and a bit of an Ethereum. I mean, this is one of the biggest bets I've ever taken. And I get it. I've never seen a risk reward like this in my career. I mean, I've seen some good ones, and, I was very lucky in the bond market last year, and, I was very vocal about it, but this is bigger. This is a really life-changing risk reward. And it doesn't apply, unlike the bond market, to rich people. It's for everybody. Mm-hmm. Because of the Satoshi and the ability to, you can make transformative amounts of money, potentially. There's no guarantee in this world. But the risk reward is, let's say you scrape together 10 grand. What's your downside? 5? Okay, so you lose 5 grand. If you're in a job, can you make that back over a bit of time? Probably. But that 10 grand can go to 500 grand. Okay, that's life-changing. So, that is how attractive this is as a value proposition. And Michael Saylor, he wants to take that bet. Now, he may not think of it in risk-reward terms. He's thinking of the marginal cost of inflation on his cash that he's holding. But the reality is, if he nails this bet, it'll be worth billions. Now, think about Block 1. Block 1 is sitting on $2 billion of Bitcoin.
Yeah.
Right? What's Brendan going to do if Bitcoin goes up 5x over the next year? He's sitting on 10 billion in cash. Coinbase, Binance, they're all sitting on billions of dollars of Bitcoin. Mm-hmm. I mean, so there is a very implicit risk reward bet that they understand here.
The one thing that hasn't been as attractive, or something that maybe a lot of Bitcoin, hopefuls have wanted to see, is this correlation, this breakout of correlation for Bitcoin, right? We're still very correlated, or at least moderately correlated with the S&P 500, and the correlation with gold has sort of disappeared. Is that something that you've been surprised at?
No, because it has the attributes of a currency and a bit of a commodity. So currencies are what's known as Bayesian in distribution, which means that they have shifting variables that affect them, which is why currencies, which for very simple things, are so impossible to forecast. Mm-hmm. Because everyone goes, look, it's the interest rate differential, and then it's not. And then it's the corporate M&A flow, and then it's not. And then it's the inflation rate in the country, then it's not. Then there's always a different reason, and it shifts. Bitcoin has that. So it's got shifting correlations, and that's okay, and they will change over time.
When you look over extended periods of time, the correlation is not so much. Now, Plan B, who models some of this stuff out, him and I were chatting, is like, I'm not sure that the correlation that he picks between the S&P and Bitcoin is not just the correlation with the central bank balance sheet, which both have been correlated to. So, there is a number of different ways, but also if you look at it in that term, well, you take the G4 central bank balance sheets, the equity market has basically underperformed over an extended period, then recently kind of held its own against it.
Mm-hmm.
Gold underperformed by 50%. Bitcoin, the only asset that killed it, that completely outperformed. So over time, even with the correlation between equities and Bitcoin, the risk reward is in the favor of Bitcoin. But I think these correlations shift and pass. So I think they're dying off as we speak, as the narrative will change and there'll be a new thing that will be exerting itself. It may just be flows in the end of Bitcoin. We may all say, yeah, Raoul's right. Everyone's going to front run the largest amount of flow in history. Let's all do this together. And before you know it, bang, no correlation with anything because it's now correlated to flow or future flow.
Mm-hmm. To a degree, I feel like it's the correlation has indicated the extent to which institutions are already operating in this market, whether they're playing with CME futures or on other US-based markets. And it raises an interesting question, which is, what is the next catalyst, right? Everybody's always asking when institutions, if they're already here, then what is going to be the trigger that helps us push forward on price? Is it something in the macro backdrop, or is it an ETF, for instance?
Yes, look, I think it's flows, right? The problem with Bitcoin is the market cap is...
Where are those flows coming from next, right?
Yeah, so it's a $240 billion asset class, right? It's a mid-cap S&P stock. Right? It doesn't mean anything. So really, the next phase is you saw that the US regulators have allowed certain US banks to custody Bitcoin, right? That's code word for prime broking.
Mm-hmm.
So once that's up and running, looks like it's the next couple of months, the hedge funds can get access. Okay, one. Secondly, whether it's Hunter Horsley and Bitwise or somebody else is going to get the ETF across the line. And that's coming, and that will bring the RIAs into the space. The corporate treasurers have started, and that will pick up space over time. And again, the larger the asset class it becomes a reflexive loop, because the bigger it gets, the more it forces in institutions. We know that the endowments have been slightly involved because they have that long-term time horizon and can stomach the risk. So therefore, if it starts going up, they'll allocate more money. So we've got this really amazing reflexive loop that's lying ahead of us. And it's not going to come from one thing. It's going to come from a number of things with the backdrop of more printing of money. And that gives people the narrative to hold on to, and then the flows come.
You mentioned, I think it was this week or either last week, that eventually we're going to see the large caps, Microsoft, Apple, the large tech companies of the world follow in the footsteps of Square and our friends at MicroStrategy in terms of purchasing Bitcoin as a way to hedge against devaluing fiat. What is it going to take for them to do that in the next 5 years? I don't
think it's about devaluing fiat. They will generate so much cash, it's irrelevant to them.
Mm-hmm.
Right? The 2% inflation haircut, whatever it is, or however you measure it. What it is the diversification effects in a portfolio of currencies and credit and bonds that they own. That's the key thing. It will make their portfolios perform better under more scenarios. That's going to be the driver. Once they figure that out, they'll all come.
Mm-hmm. And in 5 years, what do you think will be the biggest impediment to that?
I don't think there will be impediments to that in 5 years. It depends where we are on the narrative in 5 years. Mm-hmm. So the impediments in terms of how difficult it is, where to get custody, that's all being solved as we know. The regulation, everything is being solved. So 5 years' time will look very different to now. We'll make that quantum leap into an accessible crypto world overall. The question is what's the narrative then? Do you need it at that point for the diversification effects? Because there will be a period of time when Bitcoin will be unloved again and it'll get beaten down because the narrative will have shifted. And that's okay, because that's how it works. It's an asset. All assets do that. The price of copper does it. The price of gold does it. So the narrative will shift at some point. That'll be the biggest impediment, because don't extrapolate linear growth. You have to extrapolate that.
And you guys, you guys have kind of taken a bit of a quantum leap of your own, diving a bit deeper into crypto. Let's talk about that. How's that been going?
Yeah. Many people came to us and said, big players in the space, and said, listen, we love what you do in the macro world. And I've been the guy saying, listen, macro and crypto have collided. And they're like, okay, we're all in the same place now. You need to launch a crypto tier or a crypto channel where you do the kind of real vision stuff, which is in-depth analysis. You get the biggest names, plus you find all these gems of people you haven't found, and you help us all understand what the hell is going on. That's what we do in the macro world. And it's been an amazing place that we've carved a niche. We don't do news, for example. That's not our forte. Our forte is analysis, forward-looking, that kind of thing. We don't analyze news events that have just happened. We're always looking, okay, where is this all going? So we're trying to help people navigate that world. So crypto is an obvious place, because the crypto guys need to learn about macro, because the two worlds are blended. So here's us talking about crypto, but we're talking about in terms of fiat money debasement and economies and stimulus and stuff like that. The macro guys all have to learn crypto, because it seems to be the biggest opportunity for them and a way to get around some of the issues within the financial system. So yes, we launched Real Vision Crypto. We launched it internally, and then we will be launching it publicly in the next 3 weeks, and it'll be free. And so it'll be a huge launch. We've got some very big partners behind it as well. So we're doing it in a different way with a consortium of some of the biggest sponsors in the world. And then we've got some other bigger plays to make in the space as well, as we kind of roll up the whole crypto strategy. But yeah, it's going to be very big, really exciting.
I've probably been having tons of conversations with folks at the intersection of these two spaces. What do you think, the big narrative at the intersection of crypto and macro is that people aren't necessarily paying attention to? We talk about CBDCs, we talk about the sort of treasury allocation strategies, we talk about stable coins, DeFi. Is there anything that folks are, topics that are beginning to creep up that maybe don't get enough attention?
Well, in the macro world, I think the topics are pretty well known right now. So I don't think the macro narrative is wildly different. Inflation, deflation, dollar up, dollar down. Basically, those two things will dictate everything. Dollar down, emerging markets go up, gold goes up, etc. In the crypto narrative, there's some interesting things that we see building, like that kind of interoperability of platforms. How are you going to build the layer that allows everything to connect? So again, the macro guys are trying to figure, we live in the future. Our job is to see where the future state is and then try and make bets accordingly. So when we're looking at that, we're saying, okay, we can see Ethereum, Bitcoin, private tokens, different ledgers, blah, blah, blah. Okay, where's that all going? It's not just a cryptocurrency, Bitcoin's going up world. It's okay, this is a fantastically complicated new system that all needs to work together. It's like Apple and Microsoft and mobile phones and modems, and in different countries with different broadband standards and different spectrum. How the hell does it all work? None of us know. But I can send you a text from my phone to you, or an email, and we don't know any of the rest. That all is going to get built here. So the infrastructure, that next layer down, is super interesting, where it's not sexy, but it'll change the world. Mm-hmm. So I think then you can start to see the macro impacts of that, because then it changes the whole internet of value. That's mm-hmm. when you really create that whole platform. So that becomes very interesting to macro, because you then start creating more of these tokenized assets and stuff like that, that we can trade in long short portfolios and stuff like that. And that's a really complicated and exciting world where you can generate alpha.
There's the old expression, I think it was Lenin, right? I think it was Vladimir Lenin. There are decades when nothing happens, and there are weeks where decades happen. I feel like it's become a truism of this pandemic, whether it's pushing innovation on the healthcare front, right? Like telemedicine has never been more prominent than it is now. I did my first virtual doctor's appointment during this crisis, right? Because, you know, we realized how easy it is. It's right there at your fingertips. We have, you know, smartphones that can do that, etc. We also realized how terrible our financial system is at pumping liquidity to Main Street. We're really good at doing it for Wall Street. We kind of learned that lesson in '08, and we were able to implement that here for the banks. And the banks, you know, their stock prices aren't doing that great, but for the most part, the financial infrastructure hasn't been that bad. But one thing that's been revealed is how bad we've been at getting checks into the hands of regular people.
Yeah,
right?
so look, this is the other thing, you know, if I think about the macro narrative that is clear to me, is everything we understand about fiscal and monetary policy is going to change. Literally, we can throw out all of the books. Because when central bank digital currencies arrive, I can stimulate directly to you and differently to anybody else. I can give you a different rate of interest. I can apply behavioral economics. I can give you different incentives and different disincentives. So it changes everything we understand about the economic drivers. It even changes what economic data we'll use. It changes literally everything. What does that world mean? Well, there's some really bad sides to it because it becomes like Facebook rules the world, because that's behavioral economics, you know, because don't forget Daniel Kahneman and these guys helped Google, Facebook, everybody build out their businesses. And they're going to help governments too. And that's going to be like the Chinese, they have control over you. But really, you can also do things like implement universal basic income at a very simple level.
Yeah, we would have never learned that lesson without this backdrop. You know, the rate at which we were going to roll out CBDCs and the rate at which Bitcoin and digital currencies would have been adopted wouldn't have happened as fast without COVID, right? I mean, there's kind of like a meme, you know, is COVID good for Bitcoin? Everything's good for Bitcoin, right? We go about that on Twitter all day long. But in reality, this crisis did reveal the benefits, I think, of leveraging these technologies to pump liquidity to ordinary people.
Yeah, I mean, look, I think the two winners of everything in this has been fintech, the whole digitization of financial markets. And the other one is the other bet that we made at Real Vision, which is video. Video is basically destroying the world in its own way.
Unless you're Quibi.
Unless you're Quibi. But see, Quibi missed the revolution of what's really going on. The world is moving away from the Netflix model, and it's moving away into the model of what you and I are doing today. Mm-hmm. Or where Real Vision goes, where we've got communities, where people are interacting with each other and sharing ideas and creating the hive mind. Community is the future of media. And Quibi really kind of lost that. You know, why did TikTok work and Quibi not? Well, Quibi's community.
Yeah.
It's a two-way street, right? Push broadcast is finished as the market leader. It'll always be there. Yeah. It's not where everything is going. So video is literally changing everything. I'm so used to talking to people on video now that I don't miss necessarily the normal work interactions because I feel like I'm with them. You know, I have glasses of wine with friends on Zoom. It's pretty normal now. So it's amazing how adaptable we are. So that and fintech have become, I think, the two absolute runaway winners. Because video is about to disrupt education. It's disrupting live events. You know, live events business was a crappy 20% margin business with massive costs, upfront costs. It's now turned to a SaaS business with 80% margins. I mean, wow. Education, same. 20% margins, terrible business, unless you've got the best brand in the world, now turned into a 80% margin business. Unbelievable.
Yeah. Although sometimes I miss just regular phone calls. Call myself sometimes, you know. It's not that bad. I miss the old phone call.
I do phone calls.
You don't always have to see your face.
No, that's true. That's true.
Face, yes, you've got to go on, but not everybody.
Yeah, and so, well, Saturday morning, you really don't want to. When your hair's like that, your breath stinks, your eyes are bloodshot. You just don't want to speak to your mother on video. It's like, Mum, use the phone.
Yeah, well, it's better than person, though. You can smell the breath.
That's right.
Well, Raoul, we have had quite the conversation. You know, we're upset that Ryan couldn't join us, but he's here in spirit. We're really excited for the rollout of Real Vision Crypto. Everybody who's listening has to check it out. Raoul, thanks so much for joining us. We'll have you on again soon.
Yeah, and also just a quick reminder, we also have a free YouTube channel with some of our macro content and crypto content. So Real Vision on YouTube or the Real Vision podcast, same content in audio form. So, knock your socks off. There's tons of free content out there. Enjoy it because it's really world-class stuff.
Yeah, it's awesome. And I think at some point we're going to have our guys on to talk about what we're seeing in stable coins. That's going to be really fun. That's another market. We didn't really necessarily dive into that in that conversation. That's a whole nother $25 billion topic. We'll save for next time.
Absolutely. I look forward to it.
Thanks so much.